promised our listeners we'd be talking about Brexit and basically how that's affecting our housing market, interest rates, home ownership, the affordability. What does it look like long term for us? Do you know that answer?
I don't know the answer to the long term, but it's really exciting for my position, at least for my job and my industry, because with Britain exiting the European Union, it created such a direct impact on our market, our interest rates, the way that our housing market works, and all of those different things. What happened is that when Britain decided to leave the European Union, the stock market became unstable and it was uncalculated. So a lot of the stockbrokers and people that are investing money into risky securities saw a better, more stable place to put their money. And that was into the 10-year bond. So they took it out of the risky situations in the stock market and they put it back into the 10-year bond, which the 10-year bond is what we directly base our interest rates off of. So when people start investing into that 10-year bond, it makes it stronger. When it gets stronger, the interest rates drop. And when they dropped, there's a couple different things that happen. People that were under agreement that had floating rates saw an opportunity to lock it and get a better
refinance.
Rate. Well, no, when they're buying a house.
Oh, okay.
So if I had people that are pre-approved or pre-qualified or just went under contract and they didn't have their rate locked, at that point their whole entire financial scenario got better by almost quarter of a point, 3/4 of a point, which a quarter of a point, 3/8. So if they were at 4% when they started shopping, now they're at 3.5, 3.625.
That's huge.
Huge.
Now, let's just say on a $200,000 mortgage, or what would that be for buying power? Would that be an extra $10,000, $20,000?
It's about $100 on a $200,000 house. If I did quick math per month, so $100 would probably get you about $10,000 or $15,000 more in financing if you wanted to take advantage of more financing, or you stay where you are and you just have a lower mortgage payment from what you were budgeting when you started shopping. Another thing is that regardless of what people believe, I don't like to give high interest rates. I love giving low interest rates. So when I had a buyer that was pre-approved, and then I was able to give them the good news that hey, rates just got a little bit better. I just got it down to half of a point. They were like, wow. That was like, that's
they
awesome.
love you.
Yeah. It makes it a real good conversation between me and my customers. It makes it a lot more comfortable when they know that their mortgage payment potentially just got a little bit cheaper for the same house, or they were able to afford a bigger house.
Oh, totally. We've got some very educated listeners that tune into our show, Matt, and I guarantee you there's some people out there that could school us on how Brexit's affecting our economy and whatnot. But I think it's really interesting from the mortgage standpoint, and I've just learned a couple of things too from you here. I appreciate that.
Well, there's a couple different.
They do too.
Yeah, there's a couple different things. A lot of people I've seen, they get into a position where it makes a lot of sense for them to refinance a property, to take some cash out and possibly go buy another house, take a refi, take some cash out as a down payment to go put on another house, investment property. So it creates a lot of opportunities to get some immediate business and then continuing business depending on what their financial profile looks like. So someone would come in with a strong equity position in their current house. They'll refinance, take 25-50% out of their house that they currently own, and then want to go buy an investment property or a vacation home or somewhere where they can use it to get a bigger revenue and return on their investment than just letting it sit in the equity in their house. So
that brings up a good point, actually. So let's just say somebody bought a house 6 months ago, okay, because you need at least 6 months to refinance, right? To down to lower rate. All right, so they bought a house 6 months ago. They've been on time with all of their payments. They've put a ton of money into the house, rehabbing it. Let's just call it $170 that they bought the house for. The house now is worth $240, so there's quite a bit of equity in there. Can they use that equity and purchase an investment property that they want to flip? Is there a program for that?
For sure. I mean, definitely you have to have a strong financial portfolio when you're going to buy an investment property. You have to have your assets behind you after your down payment and stuff. So it has to make sense, but that's where we do a really good job of outlining that game plan and putting together that strategy and see if it makes sense. And then once you come up with that game plan, you start executing to whatever that play by play is.
Wow. So I mean, that just gave me a really great idea. So actually, instead of flipping that property, maybe hold on to it for a couple of years and rent it out, and then pay the second mortgage, well, the first mortgage that you have on your second home,
right,
and then rent that thing out.
Yeah. But starts operating on itself.
You'd need a 25% down for that, though.
Yeah, that would be ideal.
25% down for that.
I think there's 15 and 20, but you want to do 25.
Wow, that's awesome.
Yeah, another thing is that like there was the last big refinance boom that we saw was when our economy got low and we had our housing bubble, and then afterwards it went through a finance boom where everybody was just taking advantage of the low interest rates. That was because of our economy and what we did.
Yeah.
Now this is direct implication of another country's decision to leave, and so it's not directly us. You know what I mean? It's not because we went through a bad economy or our economy was weak for a certain amount of time. This is just a reaction to something that's happening out at a different part of the world that was unpredicted. Like I didn't have any idea that this was going to happen like 6 months ago or 4 months ago when I was locking customers.
Yeah.
And now it's exciting to see this, and it's like, oh wow.
Oh, anything could happen, but things could change in a minute.
Yeah,
just like right now, we're in a seller's market. That could all change. What happens if something complicates the rates and the situation and makes them jump up to 6-7%? And that could happen too. Now, all of a sudden, housing values have to slide down quite a bit in order for the same consumers that are out there pre-approved now to be able to buy. So now, if they can't get pre-approved, you're reaching a smaller pool of buyers, prices slide. It's bound to happen one day or another. If you're listening, you remember the 80s, 14, 15, 16% interest rates. If you got 12%, you were happy as a pig in mud. And right, and
sure.
And the average 40-year rate 9%, 8.9%, something like that. So right now at 3.5%, 4%, even 5 or 6%, those are still really great rates. But it won't.
For sure.
That's not going to be here forever. It won't.
No, that's why you got to take advantage of it now. If you're interested in getting into the market, get in. I just had one of my best friends go under contract on a house. I was able to lock his rate at 3.5, and that when we first started the conversation, it was closer to 4.125. I mean that cut off a lot on his mortgage payment and the interest over the 30 years. I mean, you can do the math, anytime, but it's a lot, and it makes his experience more enjoyable, and I enjoy having those conversations day in and day out with multiple people. So.
So Matt, I know that you wrote a paper on this. You wrote a paper, the 3 ways Brexit is good for you, the consumer. And if you want to get a hold of this paper, it's really great information. Go on the roundtableradio.com. I want you to go into the contact section, put your name, your email, phone number, any of your contact info you wish to have on there. And in the subject area, you can type that you heard our show, and the keyword is Brexit, okay? Just type that in. I will get you in touch with Matt so Matt can get you over those 3 ways that Brexit is good for you, the consumer, right now. And it's really great information. You should share that. Or if you know somebody that it could help, share that with them as well.